Hello everyone, Theo here from Market Mind Mastery. I hope you're doing great and you had a wonderful trading week so far. So I would like to give you a heads up about the update on the gold. This is the analysis we post on for the gold on the daily chart. And here is the explanation if you are on our groups and you receive this analysis, or if you don't, you can let us know and we're gonna manage to get you there. So the uptrend in the gold market continued last week. Just a reminder, we publish this every Sunday night, so you are well informed for the week ahead. So as the gold price continued to make higher highs and higher lows, all right, the price made the retracement and it came back at an area which we had it as highlighted as the resistance all-time high, as you can see here. Of course, depends on the broker you're using, the price it's gonna be slightly different, the pricing here. Okay, now we're talking about some pips, but that's not the case. The case is we had some negative divergences on the MACD. While the RSI was well above 50, it's about 65.59, approaching the area of 70, and we know that the MACD, because it's a slower indicator than the RSI, it will show stronger divergences. Okay, so keep that in mind, please. I think I mentioned this in one of the analysis. I don't remember exactly which one it is. So let's just read it. The uptrend in the gold market continued last week with a retracement occurring exactly at 61.8%, as we pointed out in the previous week's analysis. And you can refer to the Market Outlook Gold on the 4-hour chart on this day. Since then, the price rally has continued with higher highs and higher low series, and I make it with bold. I put it with bold color. This week, we will analyze the daily chart since the price is approaching an all-time high. So there is no point to go on the 4-hour and lower time frames to do the major analysis. As the market is in a strong uptrend, we see that the 20 period is well above the 50 period, and also the distance between the two moving averages widening, which shows that more bullish strength in the market. The RSI is well above the 50, as we already mentioned, and that's a bullish sign. The MACD, which it takes 24 periods into account, it's considering a slower indicator than the RSI. Now, the RSI takes 14 periods into calculation. Therefore, the MACD shows noticeable bearish, or if you know, there's negative divergences, and we call these divergences B class because the price rejected as a double top, afterwards rejected. Okay, I will show you on the chart. Where we are, the indication can set the price on a setback, at least temporarily. Okay, if the price continues to move to the upside, this high must be violated. If not, we will see rejection and the price is expected to drop, of course. So if we bring the chart and we see how it developed, so I just clean everything from the chart so it's more easy for you to read. But the important thing is that the price, it was there, it rejected, it penetrates and reject, it registered an all-time high, but it didn't sustain the upward move. So let's zoom in a little bit here, because it's really important, guys, to understand this. It's a very key fundamental for price action trading. And as you know, I trade purely price action, of course, using other techniques like smart money concept to timing to find more significant areas, but the executions are basically on price action. So rejection on the daily chart And the body of this candle is maybe 3 times less than the body of the previous candle. You see, even this candle here is longer than this one, even this one here. So it's like it's equal with the bearish candle, the bullish candle that rejected the resistance and created the all-time high. So that was the first question mark of, hey, this market might not going to sustain upward move. And then it followed by this bearish candle, which it wasn't that that strong. We still had some concerns to trade this one, but of course, after the market started yesterday and traded under the low of these lows here, it was a very high probability trading setups, and we went down to the lower time frames and took advantage of everything was according to our plans and our rules. Okay, so that's all from me, guys. I hope you enjoy it, and I hope you really start understanding that a very, very solid weekly trading plan to equip you with everything you need to know for the week ahead. It's very important and crucial for your trading profitability and market learning. So, and here at Market Minds Mastery, we do not only the gold, but the US oil, and we have a great opportunity today in few hours when the US market will start trading intense. Of course, we're going to look to capitalize on this WTI, of course, based on our analysis here. Of course, for the Bitcoin, for the two major US indices, we don't do the Nasdaq yet, but we're going to do the Nasdaq as well. So that's the S&P 500 and the US 30, and we have the German 40 as well as the pound, Japanese yen, USD Swiss, USD yen, Australian dollar, US dollar, pound, US dollar, and of course the euro, US dollar. Okay, and don't forget, on every single day you can read what you expected to happen based on the macroeconomic scale. Okay, and the recap of the previous week. So thank you so much for watching. I hope you guys enjoyed, and I will definitely update you on the next video.